Hi guys, welcome to a new video. Today we are going to be studying a chapter called Audit of Dividends. This is not like a separate chapter which is there in CA Final or CA Inter. It is a part of company audit in CA Final chapter. Okay, so what is dividends now? Dividends is basically the surplus profits available with the company that is distributed by the company. Let us say if the face value of a share is 10 rupees and the company declares a 150% dividend. So dividend percentage is calculated on the face value and not the fair value. So 150 percentage of face value rupees 10 would be 15 rupees. So the dividend would be 15 rupees per share. Now, can a company declare dividend even if it has losses? Can a company declare dividend any number of times? What are the rules, regulations? What if some shareholders don't get their dividends paid? So there are some certain rules and regulations that have been laid down by the Companies Act 2013, and this chapter will help us to understand these rules and regulations which have been set out by Companies Act 2013 in the for the audit of dividends. It's a very simple chapter. The rules and regulations are also very simple, very basic, and it's a fun chapter. It's a nice chapter. Now, the first answer is law relating to the dividends. Dividend cannot be declared or paid by a company except out of profits for that year after providing for depreciation. Very, very important. You have to provide for depreciation first, and the profits that are left after providing for depreciation can be used to pay dividend out of the profits of any previous years arrived after providing for depreciation. So you can use the current year profit after providing for depreciation, or you can use the previous year's profits again after providing for depreciation. Depreciation is a very, very important key thing that is being used here. You cannot utilize the profits unless you have provided for depreciation. Depreciation is like a mandatory expenditure that you have to provide for before allocating profits for dividend. Third is out of money provided by CG or SG for the payment of dividend. So out of profits of the current year after providing for depreciation, out of profits of the previous years after providing for depreciation, or after any money that has been provided to you by the central government or state government for the payment of dividend. You can use these three sources for the payment of dividend. These three can be your sources from where you can take out money and distribute to your shareholders. Transfer to reserves. What is this saying? A company may, before declaring any dividend, transfer such percentage of its profit to reserves as it considers appropriate. For example, if a company has 50 crores of profit in the current year, does it need to distribute full 50 crores to the shareholders? There is no such mandatory requirement. The company is not mandatorily obliged to pay dividend. No, there is no mandatory requirement. Only if it wants to, as per its own discretion, it can pay a dividend, and accordingly, as per its own discretion, it can transfer such amount as it wants to reserve. So let us say out of 50 crores that profit it has had in this year, it may decide to transfer 45 crores to reserves for utilization in the future years, and 5 crores it may distribute as dividend. So any amount which it feels is appropriate for the future functioning of the company or for any other purpose as it deems fit, it can transfer that money to the reserves, and the balance money only it may distribute as dividends. Now, dividends out of past profits. In the event of inadequate or absence of profits, dividend may be declared from surplus available subject to fulfillment of prescribed conditions. Okay, so you can also use your past profits. No dividend from reserves other than free reserves. No dividend shall be declared or paid from reserves other than free reserves. So like you can have a revaluation reserve, so dividend cannot be paid from that. You may have a securities premium reserve, you cannot pay dividend from that. You may have some kind of other reserve that is earmarked for a particular purpose. You cannot use any earmarked reserves. You can use your general reserve, you can use your surplus. These two are the only sources, and your current year profits, your three sources from where you can pay dividends. And the fourth sources, of course, if the central government or state government is specially giving you some money and saying you can use this to pay dividends, then you can use that also. Dividend includes deemed dividend. As per section 2 of the Companies Act, dividend has been defined to include interim dividend also. Any interim dividend that you have paid during the year after a particular quarter, even that is also coming within the purview of dividend. So whatever rules and regulations are applicable to dividend, they will also be applicable to interim dividend. No separate rules and regulations have been formulated and given separately for interim dividend. Whatever is applicable to dividend is also applicable to interim dividend also. Dividend policy. Now, what is the audit consideration? How is the auditor What would the auditor consider about dividend? Does he, factor in as to what percentage of a dividend should be declared by a company? No. He will just ensure the dividend is paid properly. All the rules and regulations relating to dividend have been followed appropriately by the company as per the requirements of the concerned laws and regulations. That is what an auditor is going to be concerned with. He cannot interfere into how much percentage a company can declare dividend. He will also check the sources of dividends, from whether dividend is being paid, whether it is being paid from free reserves or is the reserve not free. He will check all the compliance part. So let us read this answer. An auditor is not concerned with the dividend policy of a company. He is rather concerned about the reality and payment of dividend. The basic decision about dividend is that of the management. The shareholders do not have the authority to enhance the sum proposed by management unless the articles allow such a procedure. So the shareholders can ask for an enhanced dividend only if the articles of association of the company have such a feature enlisted in it. Next, payments of dividend. Dividends once declared becomes the liability of the company and must be paid within 30 days from the date of declaration. Very important. Once the company is declaring dividend, it becomes a liability of the company. And as soon as it becomes a liability of the company, within 30 days, it must pay off the dividend. Failure to do so will attract a penalty. Payment of dividend on any share should be made only to the registered shareholder or to his order or to his banker. Whoever is the registered shareholder, the registered member against that share, only he should be paid the dividend. Dividends are not payable except in cash, check or warrant or electronic mode. A company may, if authorized by its articles of association, pay dividend in proportion to the amount paid up on shares. Let us say the face value of a share is 10 rupees, and if you've paid up only 7 rupees, so you've paid up 70% of the face value, and that is why you will be entitled to a dividend of only 70% of the actual dividend amount. Fourth point, the board may deduct any calls and arrears from dividends payable to shareholders. So these are all the rules relating to dividends. What are the rules? First rule was you have to pay dividend within 30 days once it becomes a liability of the company, and if you don't do so, a penalty will be attracted. Payment should be made to the registered shareholder, the registered member, whoever name the share is in, and dividends are not payable except in, you can pay dividends only by cash, check, warrant or electronic mode. A company may pay dividend in proportion to the amount paid up on shares. A company may also deduct any calls and arrears before paying off dividend to the shareholders. Now, the deposit of amount of dividend in separate bank accounts. So this is like a procedure of dividend. First thing was within 30 days you have to pay off the dividend. In what all modes you can pay the dividend. And there is another procedural part. What is this procedural part saying? The amount of the dividend, including interim dividend, should be deposited in a scheduled bank within 5 days from date of declaration of dividend. So if you see, within 30 days you are supposed to pay off, but before that, within 5 days of declaration, you have to actually separate this entire amount, keep it aside, remove it from your business, keep it aside in one scheduled bank account within 5 days from the date of declaration of dividend. This is again a procedural part. Now, what is the punishment for failure to distribute dividend? We had seen over here in this payment of dividends ka first point, dividends once declared become the liability of the company and must be paid within 30 days from the date of declaration. Failure to do so will attract a penalty. Now, what is this penalty? If a dividend has been declared but not been paid within 30 days from the date of declaration, following shall be punishable. Who is to be punished? First of all, every director of the company who is knowingly a party to the default, with imprisonment up to 2 years. You can be jailed for up to 2 years, and a fine of minimum rupees 1000 per day during which such default continues. So let us say 30 days is the time frame within which you have to pay off your dividend. Let us say you don't pay off till 45 days. So you have defaulted for 15 days. So the fine would be 15,000 minimum. Maximum it can be anything, right? And you can also be imprisonment. The directors who are party to such default, they can be imprisoned or jailed up to 2 years. However, no offense shall be deemed to have been committed where dividend could not. So these 5 points are also very important. Okay, these 5 exceptions. When will no offense be deemed to have been committed? Like, when is a penalty not applicable? Like, in these 5 cases, it is not the fault of the company for non-failure to pay dividend. It is it is due to some other reason, some other logical reason that the company has been unable to pay dividend to the registered shareholder. First, where dividend could not be paid due to operation of any law. Second, where a shareholder has given directions to the company regarding payment of dividend and those directions cannot be complied with and the same has been communicated to him. So the shareholder has said ki maybe you give it to some other address or you give it to some other person. The company has tried to do that and the company was unable to do that, and they have also communicated that they were unable to do that to the shareholder. Then it is not their fault, because on their part they have tried their best to follow the shareholders instructions, and they could not fulfill it, and they have also informed the shareholder of the non-fulfillment of the conditions which he wanted, and they have also fulfilled. Now they can't do anything more than that, right? So in this case also there will be no penalty that will be levied on the company. Third, that there is a dispute regarding the right to receive the dividend. Two shareholders are claiming the same dividend. Fourth, whether dividend has been lawfully adjusted by the company against any sum due from the shareholder to the company. Maybe he's a debtor of the company and some money is receivable from him. So they have adjusted the dividend lawfully. Lawfully is very important. Fifth, where there was a failure to pay dividend but not due to any default on the company's part. So there is some other failure to pay dividend but it is not due to the company's fault, then the company will not be held liable for failure to pay dividend, and accordingly there will be no punishment. So these five exceptions are very important. Next, unpaid dividend account. Dividend declared which has remained unpaid or unclaimed for 30 days from the date of declaration shall be transferred by the company to a special account called unpaid dividend account opened in any scheduled bank. Now why is this again being done? It is not like, so see, dividend has to be paid off within 30 days, right? But after it is, if some of this dividend remains unpaid or unclaimed after 30 days, does not mean the company can bring back this amount into the company and start utilizing it for its operations. No, this shall now be transferred to another account called unpaid dividend account opened in some scheduled bank. Such transfer should be made within 7 days from the expiry of 30 days. Once your 30 days for the payment of dividend expires, within the next 7 days you should make this transfer to unpaid dividend account. In case of any default in transferring such amount, the company shall pay interest at 12% per annum on the amount not transferred. In case of any default in transferring such amount, the company shall pay interest at 12% per annum on the amount not transferred. So 12% per annum on the amount not transferred, and such interest accrued on such amount shall endure to the benefit of the members in proportion to the amount remaining unpaid to them. So in whatever proportion the amount is remaining unpaid to them, in that proportion the interest will also become additionally payable to them in addition to the dividend unpaid plus interest they will get. Any person entitled to money transfer to the unpaid dividend account may apply to the company for payment. So let us say within 30 days of dividend declaration, I have not claimed my dividend. Now my dividend would have been transferred to an unpaid dividend account. So I as a shareholder can tell the company that my dividend is lying in the unpaid dividend account. Please give it to me. Obligation to place details of transfer to unpaid dividend account on website. The company is required to prepare a statement containing names, their last known addresses, and the unpaid dividend to be paid to each person within 90 days of making transfer of the amount to unpaid dividend account, and place it on the website of the company if any, and also on any other website approved by the central government for this purpose. So what are they saying? Within 90 days of transferring the amount to the unpaid dividend account, you should also publish the names of all the people who to whom this unpaid dividend belongs, their last known addresses, and the unpaid dividend to be paid within 90 days. Okay, they should place it on the website of the company if the company has a website, and also on any other website which is approved by the central government for this purpose. So some of the timelines that we have seen till now: dividend, once it is declared, it becomes a liability of the company, and within 30 days it should be paid off. Okay, so in this answer, we saw the amount of the dividend, including interim dividend, should be deposited in a scheduled bank account within 5 days from the date of declaration of dividend. Again, for unpaid dividend, we saw that after 30 days, within 7 days, you should transfer the unpaid dividend to a separate account called unpaid dividend account. Also, within 90 days, you should publish the information of unpaid dividend shareholders on the website if the company has a website, or on a central government website which has been prescribed for this purpose. Unpaid or unclaimed amount of unpaid dividend account. Now what should you do with this? Any money transferred to unpaid dividend account and remains unpaid or unclaimed for 7 years from the date of such transfer shall be transferred by the company along with any interest if accrued to the Investor Education and Protection Fund, which is called IEPF in short, All shares in respect of which unpaid or unclaimed dividend has been transferred shall also be transferred by the company in the name of the IEPF. So you will not only transfer the unpaid dividend lying in that unpaid dividend account to the IEPF, you will also transfer those shares, those shareholders whose name that dividend is lying unpaid, those shares also you will transfer to IEPF. IEPF is Investor Education and Protection Fund. And see, they have given a timeline of 7 years. Within 7 years, if that amount is not being claimed by anyone, please transfer it to IEPF. And also the shares on which this is lying unclaimed, please transfer those shares also to the IEPF. Any claimant of shares transferred shall be entitled to claim the transfer of shares from IEPF in accordance with prescribed procedures. So any shareholders whose shares are being transferred to IEPF, he can come and claim them later. Now, what is the IEPF? Central government shall establish a fund called the Investor Education and Protection Fund. Following amount shall be credited to IEPF. Now, what all amount should be credited to this fund? Any grants given to IEPF by the central government, donations given by central government, state government, companies or any other institution, amount in unpaid dividend account remaining unpaid for 7 years. This we saw in the previous answer only. Interest or other income received out of investments made from the fund. So, from this fund ka money, we are making some investments. So, any interest that we are getting, that also will go back into the fund only. Fifth, redemption amount of preference shares remaining unpaid or unclaimed for 7 or more years. Again, any preference shares redemption amount remaining unpaid or unclaimed for 7 years will come into IPF. Same like dividend remaining unpaid or unclaimed. Such other amounts as may be prescribed. Next, what shall the fund be utilized for? Refund in respect of unclaimed dividend or matured debentures, promotion of investors, education and protection. So whatever is remaining unclaimed and unpaid, we are going to use it as the fund ka name only says, Investor Education and Protection Fund. So the second point is promotion of investors, education and protection, and the first point is refund in respect of unclaimed dividends, matured debentures. The accounts of the IPF is required to be audited by the Comptroller and Auditor General of India. Next answer, right to dividend, rights of shares and bonus shares held in abeyance pending registration of transfer of shares. Now, payment of dividend and allotment of bonus and right shares to the transferee is to be held in abeyance till the title to shares is decided. So in case there is a dispute regarding the title of shares as to who is the legal title, who is holding the legal title to the shares, then payment of dividend and allotment of bonus and right shares can be stopped. We may have to delay it till we have clarity on who is the title holder. Where any instrument of transfer of shares has been delivered to the company for registration and it has not been registered, it shall transfer the dividend in relation to such shares to the unpaid dividend account. So in relation to some shares where there is a title dispute, the dividend relating to such shares should also be transferred to the unpaid dividend account. Next, power to close the register of members or debenture holders or other security holders. A company may close the register of members or the register of debenture holders or the register of other security holders for any period not exceeding in aggregate 45 days in a year but not exceeding 30 days at one time. So in a year you can close the register for 45 days in aggregate in small parts, like 30 days now, 5 days later, 2 days later. That way in total you can close the register for 45 days, to freeze the name. Whichever names are there in that register at that point, we are saying we are going to pay the dividend to these all people. You don't want any new names, you don't want any names going out. These all names we are going to pay dividend to. At one point, you cannot close the register for more than 30 days, and in aggregate throughout the year, you cannot close the register for more than 45 days, subject to giving previous notice of at least 7 days or such lesser period as specified by SEBI. So at least 7 days, or if SEBI has given some lesser time period for which you have to give notice, you have to give that kind of a notice before closing the register. Very important. Now, what steps should the auditor take to ensure that the dividend has been paid only out of profits? Now, we are saying dividend should be paid only out of profits after providing for depreciation, or if the central government or state government has given you some money for paying out dividend, you can also utilize that amount for paying dividend. Now, the auditor will have to ensure that the dividend has been paid only out of profits. How should the auditor do? First, check whether dividend was declared out of profits arrived after providing for depreciation. So you will first check the depreciation has been provided for all the assets and only then the profits have been arrived at out of which dividend has been distributed. Second, check whether depreciation was provided in accordance with Schedule 2 of the Companies Act. You don't want less depreciation being provided for. Depreciation as much as should be provided, that much has been provided. You need to check that. A board resolution recommending dividend was passed. Dividend was declared only in the annual general meeting. No dividend declared in the annual general meeting exceeds the amount recommended by the board of directors. If the board meeting they have decided to declare a dividend of 15%, in the AGM they can bring it down to 10%, but they cannot exceed the dividend limit which was set in the board meeting. Amount paid in advance of calls is not treated as shares for this purpose. Calls in advance do not constitute shares. Remember that, that's very important. That is only an advance money which we have received against which we have not issued shares. So such amount should not be given dividend. Register of members was closed in accordance with this act. Dividend has been paid within 30 days. Amount of dividend was deposited within 5 days of declaration in separate bank account. This is to be done in a scheduled bank. And intimation has been sent to the stock exchange in case of a listed company. So if you see, many of the points are actually the procedural part that we have studied earlier, that only the auditor has to check whether it has actually been done in practicality. Next, interim dividend. Definition of the term dividend includes interim dividend also. Thus, all aforesaid requirements applicable in case of final dividend will also apply to interim dividend. The board of directors of a company may declare interim dividend during the financial year out of surplus in profits and loss and out of the profits of the financial year in which interim dividend is sought to be declared. If the company has incurred a loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of interim dividend, such interim dividend shall not be declared at a rate higher than the average dividends declared by the company during the immediately preceding 3 financial years. So for this we need to take one example. Let us say you are going to be declaring a dividend in the month of October. Now, till September quarter, 6 months are over now, from April to September. April, May, June, July, August, September. Now, till this point, you have only incurred a loss. So, in this case, you cannot declare dividend above a certain percentage. What is that percentage? Previous 3 years, whatever dividend you have declared, that average rate you have to take. And you, let us say in the previous 3 years, you have declared 10, 11 and 12% dividend. Average comes up to 11%. Now, since you have incurred a loss till now, till the time when you are declaring the dividend, till the preceding quarter, that is till September, you have been incurring a loss, you cannot declare dividend more than 11%. That is the average of the dividends declared by the company during the immediately preceding 3 financial years. Note that if you are incurring profits, then you may declare any percentage, but in case you have suffered loss till that interim period, the preceding interim period, preceding the date of the declaration of interim dividend period, then you will have to take the average of the 3 financial years preceding, and you cannot declare dividend more than that rate. Last answer is audit procedure for payment of dividend. Now this answer, again, if you see all the procedures, all the dividend procedures that are prescribed by the Companies Act, you have to just verify whether all of these procedures have been followed. So let us just see the answer quickly. Check that all rules and regulations concerning dividends have been complied with. Examine that accounting and disclosures procedure has been complied with. Scrutinize that dividends have been declared only out of current year profits or accumulated profits or money provided by CG or SG. Inspect that a dividend has been paid only out of free reserves, that is reserves except any amount representing unrealized gain, notional gain or revaluation of assets. Verify the dividend recommended by the board has been approved by the members at AGM. Verify that dividend has been transferred to a separate bank account in a scheduled bank within 5 days. We have seen all of these points. Verify the dividend has been paid within 30 days. If not paid within 30 days, within 7 days, transfer to unpaid account. Within 90 days, again, you have to also publish the names on the website or on any website which is approved by the CG for this purpose. Check the procedures that have been followed for payment of dividend out of unpaid dividend account. Even here we saw if anybody comes and claims dividend in the unpaid dividend account, we will have to pay it off to them. And last, we will have to verify that this unpaid dividend account and any interest that is payable has been transferred to the IPF if such amount has remained unpaid for 7 years. So this is it. This is your audit of dividend chapter. In this chapter, I would say that if you remember the procedure properly, those few dates that are there, 5 days, 7 days, 30 days, 90 days, then this chapter is very simple. There is not much to study, and you need to study this penalty for failure to distribute dividend, and what are the 5 cases in which this penalty cannot be levied. So that's it for today. Hope you've liked this video. Please follow my Telegram channel. The username is CA Newton Lobo. If you've liked this video, please do like, comment, and subscribe my channel. Thank you for watching and see you in my next video. Bye bye.